In today's video, we're facing the following basic financial questions. What is a stock? Why do stocks exist? How can they benefit you as an investor? And what actually makes a stock valuable? This video is for anyone who's new to the stock market and looking for a simple, easy-to-understand introduction. A stock is a type of security that lets you essentially buy a small part of a specific company. When you purchase a stock, you become, in a way, a co-owner of that company. A share is therefore like a puzzle piece taken from the overall picture of a company and added to your personal assets. A company can be seen as a completed puzzle that forms a full picture. The company offers some of its puzzle pieces for trading on the stock market. These shares can be purchased by individual as well as so-called institutional investors. A stock that you purchase isn't therefore just a position added to your investment portfolio. It always has a real value, representing the share you own in the respective company. Let's now take a look at why companies issue stocks in the first place and why it can make sense for you to invest in them. Companies issue stocks to raise capital. In other words, they open up a new source of funding. As an investor, you pay a certain price when buying a stock. That amount can be used by the company to invest in things like developing new products, entering new markets, or driving innovation. However, by issuing a stock, the company also gives up a voting right to the investor. This means the investor has the opportunity to take part in the company's annual general meeting and, through voting, can have a say in the company's strategic decisions. As an investor, it makes sense to invest in a company's stock because it allows you to participate in the company's long-term success. If the company increases its profits in the future, its overall value usually grows, and so does the value of its shares. This means your stocks become more valuable over time, and your wealth increases. In addition, many companies pay what's called a dividend. This is a portion of the company's profits that is distributed to shareholders based on the number of shares they own. Dividends are usually paid at regular intervals, for example, quarterly, semi-annually, or annually. They are essentially a bonus on top of any potential gains from the stock's price increase. Some companies also offer their shareholders exclusive benefits, such as discounts on products or access to certain services at reduced rates. The value of a stock is ultimately determined by the company's fundamentals and its future prospects. These two factors have a major influence, both positive and negative, on the stock price. That's why it's important to thoroughly research the company before investing and to conduct what's known as a fundamental analysis. This will help you make a well-informed and solid investment decision. And that brings us to the end of this video. Thank you so much for watching until the end. I hope I was able to clearly explain what a stock is, the benefits it can offer you as an investor, and why it generally makes sense to take part in the capital market through stock investments. Remember, always invest in well-valued companies with strong future prospects. I wish you the best of luck on your journey to building wealth and hope to see you again in the next video.